Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to have, for the first time, actually, US critical metals. And Darren Collins, the CEO, is here with us today. Hey, welcome and good day. How are you?
Excellent. Thank you for having us.
Yeah, thanks for taking the time. I'm a shareholder of the company. I have to also disclose that here. And because I see the company extremely positive. The company is working in the battery metals universe, I would call it. But I think, Darren, the floor is yours. What is your company really about?
Well, our company is really about, U.S. assets and advancing those assets to address what is currently a significant security supply issue within the United States. We look back at, the last resource cycle, this resource cycle. The last cycle was very much about, the brick companies countries coming online. Now, I believe that this next bull market for mining and metals is going to be really about security of supply. So call it deglobalization. So we're really focused on, the U.S., where there's a significant gap in what is supply of these commodities from U.S. sources to what the U.S. demand is going to be. And that's U.S. demand across, not only battery inputs, battery metals, but also looking at national security and national defense applications as well in the case of rare earths. So we're a diverse portfolio that gives us optionality in terms of how we build value for our shareholders, diversifies geologic and exploration risk, and gives us, additional upside in the context of, what I believe would be of a single asset company. So we address lithium in Nevada, the only lithium producing region within the United States. We address rare earths, where we are opening up a district scale opportunity in the south of Montana in partnership with a company led by the former head of rare earths at the USGS, US Geological Survey. And then we have a cobalt asset in the good state of Idaho, right next to Jervois Global, where Jervois is now the only producing asset of its type in the United States, where that, cobalt is a primary metal within the deposit. So we have a very unique portfolio that we've sourced from leading prospectors within each jurisdiction. We have dedicated technical team, and again, really focused on, building out assets solely within the U.S. to address U.S. needs.
Okay, super. Sounds a little bit windy in your backyard here.
I'm getting a little bit of wind, so please excuse that.
That's okay. No problem at all. Okay, let's dive into your projects here, because this is what I find so really interesting. For sure is we need all your metals in the future, because it doesn't matter if we talk about solar, EV, if we talk about high tech, especially with the rare earths. And with rare earths project, we know in the past is not so easy to do. We know from the Chinese how they produce. It's quite a dirty way, I would say. I'm pretty sure you want to do that different. You are in Montana. So how is mining in Montana? Is that easy for you in that sense? Meaning, how do you get the drill permits and stuff like this? Is that fine?
So, interesting enough, the project was actually previously permitted at the peak of the last cycle, call it 2012. There was a drill permit issued for this asset. So that gives us confidence that, obviously permitting is quite possible here. It will be a process with the Forest Service. The uniqueness of this asset is really about the grade. The grade of this asset is quite exceptional. It's one of the highest grade assets that we're aware of within the United States, up to 18% total rare earths. A lot of that, the economics correlating to the neodymium and praseodymium. But because it's, such high grade, and, obviously we need to, look for widths here. We have good indications that we'll find them. But, that means that we can do a high grade underground type operation on this, as opposed to, a large open pit issue where you're going to have a harder time permitting. There's no doubt about that. I think also what's working in our favor here is the fact that it is so vital for the United States to have these various elements that, you're going to start to see a lot of political pressure in terms of, hey, we really need to move forward on permitting on these. We really need more production, again, as a national security issue. So although Nevada would be, kind of top of the list in the US for mining, we see good potential in Montana. That is also evidenced by the fact that Rio Tinto and USGS have been flying airborne geophysics over the south of the state, looking for new sources of rare earths. No surprise that, the former rare earths analyst at USGS is leading the company we're partnered with. So, good potential that we have a key acreage position here in this larger play, where again, we're seeing grade. We have historic adits that we've opened up. We've sampled underground. We've sampled above ground. It's looking very promising in Montana.
Super. I saw in your press release that was from the 14th February, so that's a good week ago. You have LREEs and HREEs, so light and heavy rare earth elements. On what do you want to focus? What would be for you, let's say, the main rare earth elements you really want to go for?
Absolutely. So when you do the price deck on these various elements, and you look at FOB China, and you take those prices and you calculate what the value of a ton of rock is, and you apply those prices, calculate it out, get a total value, and you divide by current gold price, just because it's something that we all understand. The better samples that we're producing here are up to 50 grams per ton equivalent of gold, just as an easy metric everyone understands. And when you look at those prices on the price deck, when you run what the value is, the majority of that value is derived from neodymium and praseodymium. So our asset is light rare earths. It's very heavy in neodymium, praseodymium in terms of the economics. And those are really the elements that you see the highest price for. You see over $100 per kilogram price for those, whereas the others you don't receive quite as much. And the applications of those, those two elements, neodymium, praseodymium, are quite broad. They are inputs in, what is green revolution, battery metals. They have applications there, but really what is a critical application for the US relates to defense. You use neodymium and praseodymium for laser-guided missiles, for long-range rangefinders. So no surprise that through Montana Tech, the U.S. Military Research Lab is actually funding grants to them to study our project. And there's one young lady who's doing her master's thesis on the asset. Every time we open up something, we get results. Montana Tech is working with us very closely, and obviously in discussions with the U.S. Military Research Lab, U.S. Army Research Lab. So we're getting good government interest here. And, to your point, processing is extremely critical in rare earths. So we are, opening up discussions with various labs here. And, we'll certainly look at the metallurgy as correlating to the neodymium and praseodymium as the primary elements in which we'll look to address. A lot of people obviously report total rare earths for headline number of, what percentage of the rock is rare earth, content. A lot of companies report, total rare earth oxide, because you add in the oxidation and you get, additional percentage there. But really what we've been disclosing in those press releases is, is a key element is the neodymium and praseodymium again.
Okay. You named it already, metallurgy. I think this is an absolute key for success in the future. Probably way too early for you now to talk about. But what are your plans for this in the future, and what are the plans for this year for this project?
So we're going to start up on metallurgical testing here soon. One of the great things about various things that the U.S. government has done here, such as the Inflation Reduction Act, is there's become a lot of capital available to really advance the kind of things that we're talking about here, not only the development and construction of deposits, but also the processing of these various commodities as well. So you're starting to see more processing and metallurgical testing capacity building up within the U.S. and a lot of, call it scientific money being spent to really refine this, where you have the Chinese that, frankly control the market in these commodities. The U.S. is making a big push to really build that out. So we see as we're advancing, there's, groups being set up in Idaho, for instance, that, we can work with here. As the U.S. continues to build this out, I think our project will, develop quite consistent with that timeline. We're not an asset that's going to be in, production next year or the year after. We are focused on discovery and building out resources and then proving out the economics of those resources. The way that we've structured the company gives us optionality in terms of how we ultimately monetize that for our shareholders, whether it's a spin out of assets, where it's the sale of assets, partnership of assets. we have that optionality baked in. And, really at this point, it's about making discovery and, creating value with the drill bit.
Okay, super. Yeah, then let's move from the rare earths over to lithium. And I saw you are in the Clayton rich, how can I say that? Clayton rich neighborhood of Century Lithium, formerly Cypress Lithium. I know the gentleman very well who is running the company, and Spiros is a good friend of mine. So you are really in the elephant territory, I would say. What's going on there with the Clayton Rich Lithium project?
So certainly there's been a lot of activity and investment in this part of Nevada as it relates to lithium. I'll back up just a little bit, high level, and then I'll dig down. The interesting thing about clay-based deposits in the U.S., and we've seen big news with Thacker Pass, GM's investment. Probably in the context of lithium, clay, one of the most notable events over the history of the development of these assets. I see lithium clay as the solution to America's lithium shortfall, where the U.S. represents a significant amount of demand, but does not have hard rock like we have in Canada, or does not have large brine operations, with the exception of the Silver Peak mine operated by Albemarle in the Clayton Valley. But it doesn't have these, large salars like we see in Chile, Argentina, these parts of the world. So I really see as, lithium clay is, as a very important source of lithium to address that issue. But when does that really take hold? That takes hold, and I believe will be addressed by Thacker Pass and GM here, where that will be a significant de-risking of clay assets. Clay has been proven as a source of lithium on a pilot plant scale. We're seeing excellent recoveries. But over time, as that scales to commercial production and that becomes de-risked, I think we see a pretty significant re-rating of value on these lithium clay assets in the United States. So I say that from a high level.
Yeah.
Digging into the asset itself more specifically and what we have a hanging basin above the valley, similar to what you'd see with an Ioneer, which is an Australian listed company. In Canadian dollars, they're circa $1 billion market cap, so they're feasibility stage asset. But we have similar hanging basin to what they have. In terms of composition of our rock, again, very similar to what you'd see with a Century, what was Cypress. And Cypress is just kind of coming up to the ridge. So you come up the ridge, and then we have our hanging basin here. We've mapped it, we've sampled it. It's pretty much drill ready here. We just have to file some work with the BLM. We have a drill plan in place. So the idea is that we have very broadly disseminated lithium clay beds at surface. We've sampled and mapped those. We have what we believe up to a couple hundred meters of thickness on these clay beds before we hit the basement floor. So we believe we have really good width here. And then economic cutoff on dated price deck in these various clay plays, you're looking at, call it 400 parts per million economic cutoff. We're sampling well above that on many of these samples, 950 parts per million. So we have all the right ingredients here to make a significant clay deposit within our own hanging basin within the Clayton Valley of Nevada. The idea is that we will drill it this year. We're obliged to drill it in order to complete our earn into the asset for 100% ownership. We are required to drill 1,500 meters. We will satisfy that, and then we will look for additional follow-up drilling this year as well. So we could have 2 drill programs on this asset this year, certainly one. We have essentially 2 parts of the property, a southern part and a northern part, dolomite formation in the center, but we have, what could be 2 significant deposits within this property. It spans about 3,600 acres. You look at the feasibility study on Ioneer. Their total footprint on their plan of operations for actual construction and operation of the mine is about just under 1,000 acres. So obviously, as you build out and develop, your mine plan, your deposit plan, everything like that, you're looking at a footprint that is, only a fraction of what we have in terms of total acreage. So we have lots of potential to build out a real asset here.
Okay, super. So that means you will drill it this year. That means we will see some hopefully good drill results.
That's the idea. We have all the elements. We have all the elements to, drill some really nice holes here. So
okay,
that is what our company is about. Our company is about making discovery and defining new deposits. with strategic value to U.S. interests. So
okay, super. Last but not least, the Haynes Cobalt project. That sounds also quite familiar to me. Yeah, because you said it already with Gerrois. I know the company also well, and did some interviews with them. And First Cobalt, of course, I know also. So, what are the plans for Haynes Cobalt?
So this is a very unique asset, similar to the others, in that it is directly on the mineralized trend next to Gerrois Global, where they've taken that asset into production. Cobalt is generally found, as I'm sure you're well aware, as a credit to gold and copper production. It is very rare that you find it in percentages where you could actually consider it one of the primary metals within a deposit. In this part of Idaho, specifically the Idaho Cobalt Belt, that is the case. So you can actually call it a cobalt asset as opposed to a gold or a copper asset masquerading as a cobalt asset. So we have a lot of confidence in this asset, given we also have from the historic adits. You can see actually in our presentation the photo of the head frame, the old head frame. We have a good majority of the historic underground workings on our side of the property. So we're on the mineralized trend. We're sampling similar grades to what Gerrois put together their resources and reserves on at surface on our asset. We have two large untested geochemical anomalies. This asset, is really, quite a strategic piece of what is a larger puzzle within the Idaho Cobalt Belt. It's not large in terms of its overall footprint, but it's important in terms of its strategic fit within the larger piece. When you look at Gerrois' asset, and they've done an excellent job with it, and this is all publicly disclosed, but you can look at the numbers and infer. They're just shy of $100 million US NPV. They have, post-tax just shy of a 40% IRR, great economics, but they need more resources and reserves. It's not a 200 million, it's not a 300 million, it's not $1 billion NPV, it's 100 million NPV. So obviously they need more feedstock for their operation there.
Which you could provide maybe in the future.
Which we could provide. The question will be, so we'll look to, do additional geophysics, mapping, permitting work on this asset, get it to the point of drill ready. And then, the question will be similar to the other elements of our portfolio approach is what is the best solution there to create value for our shareholders on this asset? Are we looking to do a partnership on it? Are we going to drill it ourselves and prove out what we see there? But that's again comes with the optionality that we have within this portfolio. So this asset is I hate to say riding on coattails, but certainly the closeology of it lends itself to being a very interesting asset within our overall portfolio.
Okay. Let's talk a bit about your financial structure. What is cash in the bank? Are you financed for this year? Who are your largest shareholders? And very important, what is your share in the company and also management?
I own 5 million shares of the company of about 51.7 or so outstanding.
1.9. It's 51.9 I have here in your presentation.
Okay. Excellent. Well, thank you. Okay, so I'm just shy of 10% of the outstanding stock. That is a material position for myself. I've been fortunate to be successful across projects in the past, and have invested my own capital here. But no one in this company is working as an employee. We are entrepreneurs. We are business builders that are aligned with shareholders, and in that respect, in terms of total insider ownership, it's over 40% of the capital structure. We own the heck out of this company, and we believe in what we're doing. We believe in the U.S. and the U.S. When the U.S. gets going, it's really hard to beat them. And governments behind this industry, I think we're going to see a lot more in terms of Inflation Reduction Act type incentives to develop and build up these assets over time. So all that to say, we have last reported 3.8 million of cash on the balance sheet. We'll be reporting here soon. Obviously, we've been spending down some of that money. We don't have an immediate need for capital, but we will take capital obviously as it presents itself. All these exploration and development companies, they obviously need capital on their explorations. We are not a revenue producing company. We are an asset company. So that's really the context to capital structure. The largest shareholders, lead order on our last round is a very well-known individual within the lithium business. He continues to support the company within the market. We're reporting all our shares. Obviously, it's well put together. It's a tight structure. We raised $6 million on a go public transaction, Canadian dollars, last year. We're trading at a premium to where we raised that money. We raised that money at 35 cents with a full warrant at 50 cents. We're trading 42 cents or so, 43 cents Canadian today. So despite some market headwinds, as we're all well aware, we've worked hard. We've worked with good investors. We've put our own money to work. I mean, that go public financing, it was a third our own money, a third a well-known U.S. newsletter writer that brought in his subscribers, and a third a couple brokers that we've worked with for a very long time. It's a tight capital structure.
Okay, super. And I saw also 27.5 million common shares are for 3 years escrowed. That's also cool.
Yeah, so that's standard TSX requirement on insider stock and on founder stocks. So we're in for the long run. I as a joke, I call it the Hotel California plan. You can check in, but you can never leave. And we have no intention of going anywhere. We're believers in this business. We're here for the long run. So escrow or no escrow, it doesn't matter to me. I've not sold a share. And in fact, over the course of my appointments as an officer and director over my career, I've never sold a share as an insider of a company. In fact, the contrary, I buy stock.
Super.
So, yeah.
Yeah, like to hear that. Great. Darren, thank you very much. It was a great insight, 22 minutes almost. Fantastic. And yeah, we look forward to some good drill results and also to your next updates in news then. And I would say keep the ball rolling because you have the right metals in the right jurisdictions and you are in the heart how can I say that? In the heart of the need for the metals because you are in the heart of the US.
Well, appreciate that. Thank you for your time again.
Super. Thank you very much, Darren. Yeah, ladies and gentlemen, that was Darren Collins, the CEO of US Critical Metals. Yeah, you heard it. Light, heavy, rare earths, cobalt, lithium. Those are the metals renewable energy and electric vehicle dreams are made of. That's exactly what we need. And without exploration, nothing happens. We need a lot more exploration in this world, a lot of more investment into it. The US has started with the Inflation Act income program here. And I think that's the right way to really attract a lot of more exploration, a lot of more search for mineable projects. And US Critical Metals is on the right path. And I would suggest you check out the company. I'm a shareholder already. Maybe you are next. I don't know. We will see. Thanks for watching us and bye-bye from Switzerland.